Hey traders, I hope you guys are well, trading safe. It is September 17th, and I've got some very important Magic Internet Money business to talk to you about. I'm going to show you guys some TA that you will not find anywhere else. So free link to the Discord is in the bio. Full video is going to be on YouTube in one cut. Obviously, I'm going to upload it in pieces to TikTok. So if you're new, stick around. I promise you will learn something. I promise this is going to be something you won't find anywhere. There is no one else doing what I do on this platform. So I'm going to give you guys some free tips and tools today. So stick around for that as well towards the end of the video. And I'll show you guys a little bit about time and price here. You can see how well respected this is, catching everything from the drop to the breakout to the high, all the way to this high right here, then the breakout again right here, and now we are looking for the 23rd and the 31st for a peak right here on the 31st of October potentially for our next pullback. So I'm going to show you guys how you can invalidate a pullback as well here today. And what we're looking at right here is a quarterly range. And so if you go to your 3-month chart, very, very simply put, this is how you would identify the range. I gave this in Faceless Crypto, which is a free group that I don't run, but I do share some of my TA in there because some pretty good dudes in there. So if you're not in there, check them out. I think Demonic Crypto is one of the big guys there, Alex. Anyway, that said, guys, if I come over to my handy dandy Doomsday folder, let's throw a fib channel on here. Reason being is this was something I gave him. I told him it was a really simple tool that he could use to spot support and resistance, including expansions to the upside and downside. So you'll notice the expansions to the downside are almost exactly on point. Support, resistance on point, and now expansions to the upside if we break the range. The negative 618 coming in at 73,527 after the negative 236. Caught our high almost exactly, negative 1 at 82,617, and 106,412 for the next one after that. You could throw on the negative 1618. I would actually recommend it. So let's do that now. And that'd be 97,322. I would never give a $10,000 window on price, but you know what? You could probably do that with Bitcoin because it's a wild one. So that's way down the line, though, guys. And so if you're intrigued already, I hope you guys are. Stick around. You will find some information you won't find anywhere else. So I'll skip through the low time frame stuff and show you guys some more high time frame stuff, things that you can utilize right away. So this move off the lows right here was pretty easy to spot. Right, we had a bat. It was a bullish bat right off of the lows, and it was a really nice one. It was one that we were looking for because we knew the Gartley coming down into this region was going to be invalidated if it didn't regain certain levels of support, and it did get invalidated. So if you're watching on TikTok, stick around for part 2. It is coming up. And as always, it's being uploaded in full to YouTube, no cuts, okay? So that said, guys, part 2 right here, how do we know when this uptrend is failing and when we should be looking for a larger pullback? First and foremost, we need to understand the scope of our range. Scope of our range is pretty simple. Come over to your high time frames. We're looking at a yearly range here. Really want to make sure that we're keeping level-headed, and you will notice that we're well within the yearly range. And I've given you guys these key levels long time ago, back in like May actually. You got these two levels here, 42,914, 49,522. And just so you guys are aware, this was from July 24th as we were regaining the range lows. I said this is where we're heading. We will range in between these two. And lo and behold, this is where we ended up, okay? So we have ranged in between these two levels, found support at the Q2 key level. We are holding it, and our target becomes the yearly POC around $56,344, which is also your global point of control, which just means all price action for me from the Rona dump to now. And then if we turn on our quarter 2, where you will notice that we are missing our POC still, it is right here, and that's in our handy dandy NPOCs folder, and it is coming in very nicely at 57,844, and the high of our quarterly range was 58,822 if you recall. So these are our targets, and you can see that we are holding support, which is what we wanted to see according to our video on the 24th of July. And if we hold this support and we crack 49.5, I expect us to make our way up to 56,300 and 57,800 accordingly, okay? As high as 58,822, in fact. So that is how, we should be trading this. Now, when do we know if the uptrend is in jeopardy and we might retest the value area low closer to 38K? Because that's always in the cards. It's still within the range, both in quarter 2 and the yearly range here, okay? So what would tell us that might happen? Let's get rid of this quarterly volume range as it is only cluttering things up. Well, we need to assess momentum. First of all, we can take a look at our fibs here from the X to the A to the D. That's how we're going to be analyzing this tool. We'll come over here, we will throw on our fibs, and you'll notice that we have ran into the 3 spot exactly. Not only did it line up with our fib off of our channel that we put on our chart earlier, but we've also got expansions to the upside here at the 3 spot. Now let's do that with a pitchfork as well. Same coordinates, X, A, D. And here's our uptrend. You'll see we regained the median of the line, go to the top, come back down, eventually hit the middle of the pitchfork, find support on the golden fib. What else would you find support on? And you'll see that we are now looking back up to the median of the fork, which is what we're targeting. And ultimately, the 3618 of our fork will line up very nicely with the Q2 POC, hopefully sometime in October. All right, guys, so again, we are looking into part 3 here. If you're on TikTok, the entire version has been uploaded to YouTube. Link is in the bio, free Discord as well. This is stuff you won't find anyone talking about anywhere on the net. So let's look at our pitchfork here that is assessing momentum. We are using the original setting. You could have used things like shift, modified shift, or inside. We were looking for trending price action, so that's why we're using trending fibs. And we're using an original style pitchfork because that is going to catch trending price action. So we now see that our key level at 49,522 is lining up. And now we start to turn on our local volume to determine if everything else is going to match that. So let's get rid of our fibs, clean the chart up a little bit. We come down here to our lows at the June bottom. And you'll see we have this here. Let's get rid of our yearly range real quick here just because we no longer need it. And we turn on our breakout range from August. And we also track our anchored VWAP, and you'll see exactly where we are getting support off the anchored VWAP from our breakout, where traders have been following this as support and resistance. And now we are breaking up, moving back towards the high and value area high of our range and our key level from Q1. So things are trading very, very technically here, guys. There's a lot of people out there that claim things that are happening is manipulation. They obviously do not keep track of ranges. They don't keep track of volume, and they're really just making excuses for their own lack of preparation for a trade. I do apologize for getting a lot of DMs during the video. Just lots of people sending me messages right now about other things. So that said, guys, what are we looking for? We want to see a break of this level, and we are still looking up on harmonic-wise to our bat, if you recall. Now, I do think this bearish bat would not be as bearish as people think. I don't think we would be getting a huge sell-off from it, but we won't know that till we get there and we see the reaction off this level. And if you guys recall, we do have a key weekly level there, and we have a very key daily level coming up as well here on our horizontals. This is our key daily level right at 48,089. Okay, and we're 48,121. We're at 48,089 now. We are approaching the level, and we have a key weekly up here right where the bat would be completing. Okay, so if we were to see this here, we could see a retracement all the way back down to the B leg of the move, which is 47,500. And if you guys recall on the low time frames here, we do have some key levels coming in there. So for the final part, let me show you how the local time frames are looking and how you could have traded those today. And so this is local price action here, guys. If you recall, we were looking for some very key levels here. For part 4, I should mention this is part 4. This was our box we wanted to see hold. Mathematically, these are just two averages of price, all right, based on structure and time. They line up very nicely with the weekly pivot this week. So if you're a pivots trader, it worked out really well. You can see we did lose it on an hourly, but if you go even one tick up to a 2-hour here, you never closed beneath it. And you had a very nice prior swing failure pattern right here where the lows were taken and then reversal to the upside. You can see we came back down. It was defended once more and then up we go. So this would have been your invalidation level. For me, I was really looking for this box. The reason why was we had our monthly value area low there. We had a lot there actually. Point of control of the old structural range, monthly value area low, 382. There was just a lot here to say that you wanted to long lower. Now, there was a very technical pattern that did come in on this right here. So even though it front ran where I would like to long, that's okay. Because I have a rule that I don't long in the middle of the range. I would have traded this on a separate account potentially had I been more prepared for it. But if I'm not prepared for a trade, I'm not going to take that trade. So you had a really nice ABCD pattern here, and it's AB equals CDs happen all the time. They are generally finishing moves down or up in terms of a correction, so whether it's to the upside or downside, and they can be really easy to trade. If you get a 786 at C, you're generally looking for a 1 spot 272 here at the lows in confluence with that 1-to-1 Fibonacci retracement from your trend-based pull here, and generally you want to see that same pull with time. All right, so this would have been exactly how you'd have been looking for that, and you'd have been looking for the 1-to-1, which you can see was our final wick down to the swing failure pattern and up, but it did occur between the 618 and the 1-to-1 here in time. You did almost hit the 1-to-1 in price as well exactly. So really nice move into the lows, and now we are challenging that key daily level off of that level that you need to see get flipped. And if it gets flipped, I do expect to see this Q1 key level up here. Also our 618 and my next profit off of my position from the lows. All right, guys, that is a rundown on how I've been trading price action. My overall position is compounded at just over $45,000 from the lows as my average. You guys know that I've taken 3 take profits on that trade, compounded twice. So I am still looking up. I don't see any reason to not see more upside as of right now. Until the trend is over, which I've shown you how to spot the trend using Fibonacci tools. The trend is your friend until the end, and I've even given you the trend projection with the pitchfork there. So yeah, guys, leave a like, comment, please, interact with me, and I'll be sure to interact with you guys back. All right, have a great day and trade safe as always.